Hello everyone. This is the pre-market report video for today, March 13th in the Indian stock market in terms of Nifty and Bank Nifty. In this video, first I'll tell you guys what are all the negative information. After that, we'll discuss about the positive information. I understand some of you might think, is there any positive news? To answer that, yes, there are some significant positive news which we'll discuss in the later part of the video. Then finally, I'll let you guys decide what to expect today. Let's go into the topic. To be honest, at present, the global momentum is really negative. On last Saturday morning, SX Nifty closed at 17,342. By equating it to our spot market, it's kind of indicating at least 100 points gap down opening today. Then, regarding Indian areas in US market on last Friday, bank stocks further crashed. HDFC Bank dropped over 2.5% and ICICI Bank dropped nearly 1%. Only Infosys closed mildly negative of 0.23%. For those who don't know, it's all started on Thursday in US market by a major bank in US called Silicon Valley Bank, and I already explained this in detail in last Friday's pre-market video. So in short, all the tech companies deposited their money in this bank, and this Silicon Valley Bank deposited those money in various government bonds during the low interest rate period. So now this bank is in the position of paying more for its depositors due to the Fed's aggressive recent high interest rate, which made them to sell near 21 billion US dollars worth of government bonds in the last few months. And because of this interest rate difference, they got the loss of near 1.8 billion US dollars in the balance sheet. To clean up those balance sheet mess, they announced the fresh equity sale of near 2.25 billion US dollars. This didn't go well with investors and made the stock to fall over 60% in one single day on Thursday. All these were old news and we discussed those already. Now, because of this stock fall on Thursday, all the tech companies and individuals who deposited their money in this Silicon Valley Bank started to take it out. In one single day, depositors withdrawn over 42 billion US dollars worth of money from this bank. 42 billion US dollars in Indian money is equal to over 3.5 lakh crore rupees. On Friday in the US market, this made the Silicon Valley Bank to drop another 6% in the pre-market. So FDIC, Federal Deposit Insurance Corporation, halted the trading of this bank in US market. It's crazy in US. In 2 days, Wednesday and Thursday, two banks collapsed. On Wednesday, before Silicon Valley Bank, a comparatively smaller bank called Silvergate Capital Corp, a crypto-based bank stock, fell over 94% as they announced the voluntary liquidation to meet its liability. In simple words, it means defaulting. So, 2 days, two banks crisis created the ripple effect. Other regional banks such as First Republic Bank, Western Alliance and Bancrop all were down by 10 to 20% in one single day. Notably, Signature Bank, which was another large bank, dropped over 23% that mainly dealt with cryptocurrency with over $114 billion in assets. Just for comparison, Silvergate's got only $11 billion in assets. All these made the US market really negative and closed significantly negative. In the end, Dow Jones decreased by 1.07%, S&P 500 down by 1.45% and Nasdaq crashed over 1.76%. US VIX increased over 10% and moved near 25. In terms of tech stocks, all crashed over 1 to 2% except Tesla as it already crashed significantly. So all this negative, US market crashed, US tech stocks down, SX Nifty down and Indian areas were down. Now the positives. First one, if you look at the Friday's US market closely, generally the overview was negative, but if you look inside, big banks such as JP Morgan Chase and Wells Fargo were closed positive. Why? Because nobody wants to hold their money in hand, so all those small bank money will now come to the big banks. So on those anticipation, big banks started to trade positive on Friday. Now the second most important positive, the failure of the Silicon Valley Bank was mainly due to the unprecedented Fed aggressive interest rate hike. Here, note this word unprecedented. It means never in US history, no other Federal Reserve increased the interest rate this aggressive. So one major bank and some more smaller banks literally collapsed. This kind of increases the doubt and might make the Fed people to stop the further aggressive interest rate hike like 50 basis point increase, etc. For example, I hope you guys remember this graph. After the Fed chairman's speech in the US Congress, the Fed Watch tool predicted that over 75% probability that Fed will increase over 50 basis point rate hike in the upcoming FOMC meeting. That over 75% probability of increasing over 50 basis point dropped to less than 40%. Now, over 60% of the probability suggests that Fed will increase only 25 basis point rate hike in the next upcoming FOMC meeting on March 22nd, which is really a much needed positive thing. And somehow somebody has to stop the Fed from what they are doing, that without thinking any consequences. This even made the 10-year Treasury bond yield to drop from 3.95% to 3.7%. So as a summary, US market, SX Nifty and Indian ADR all at present showing very negative. But this issue got the potential to become really positive one by stopping the Fed aggressive interest rate hike. Another important thing is, this issue also got the significant potential to recreate 2008. Since like the proverb, little drops make the mighty ocean, several small bank failures can be catastrophic. Before going to technical, literally just now, at 4 a.m. Indian Standard Time, Fed chairman and other FOMC members announced that they are creating a funding pot of $25 billion to support the banks in case they require money to their depositors. And also they confirmed that all the depositors whoever deposited their money in the Silicon Valley Bank can withdraw that from today onwards. At present, it's too early to say whether is it enough or not enough. But one thing for sure, it's positive that Fed people are reacting to it, and thus all the US future market are trading 0.5 to 1% positive. Anyway, coming to technical, on the daily charts, by combining last 3 days, Nifty forms a bearish 3 outside down candle formation. First a positive candle followed by a deteriorating candle and then a decrease one, which is a completion of strong reliable bearish reversal formation. This suggests that we'll be seeing more downtrend in the near future. However, if you see the single candle, it forms a hammer candle, which is generally a bullish reversal pattern. Coming to moving average and technical indicator, everything turns strong sell as Nifty at present trading below all of its key moving averages. Then coming to Bank Nifty, on the daily chart, it forms a bearish gap down candle. Clearly, it's a downward trending candle. And also on the weekly chart, it forms a dark cloud cover pattern, which is indicating a bearish reversal in the short term. Then in terms of moving average, at present it trades only above the 200-day moving average. So as a summary, it's a strong sell. Whereas in case of technical indicator summary, it's still a sell signal. Regarding options open interest, for Nifty, if you see the change in open interest, there were small quantity of new put options were added between 16,900 and 17,400. Whereas large quantity of new call options were added at above 17,400. 17,500 is the point where the maximum nearby new call options were added, and thus 17,500 is the immediate resistance to break. Then based on overall options open interest, 17,000 and followed by 17,200 got the maximum nearby put option open interest without significant call option open interest. 17,200 is the immediate support to look out for. Here please be aware, 17,400 shows they got huge short straddle. Then coming to Bank Nifty, based on change in open interest, small quantity of new put options were added at below 40,500. Comparatively, large quantity of new call options were added at above 40,500. Then based on overall options open interest data, significant short straddle were present at 40,500. Then the next maximum call option open interest is present at 41,000. So 41,000 is the resistance to break. And the maximum put options without call options is present at 40,000. So 40,000 is the support to look out for. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video, so it will help me beat the algorithm and will also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing it for my and viewers' educational purpose only. Thanks for watching.